Good afternoon, traders. This is Tony D from easyMarkets in Sydney. We've had the FOMC overnight. They did hike as expected, but the US dollar got sold quite aggressively afterwards. Now, this is in the back of a little bit of disappointment for some of the hawks out there looking for some sort of clear indication that they're going to be raising potentially more than 3 times this year. Didn't get that. You did get upbeat commentary though, and somewhat counterintuitive, the level of selling coming through. But definitely something to take note of, that the US dollar was sold so aggressively, as it was attempting to rally in general, the US dollar in the past few weeks. You've seen it's tested 90 a few times, just a little bit too much to break past this 90 level. You can see that we've been underneath it, stalling, and now we are well and truly looking more towards the downside than the top side, seeing that the most recent rally has failed again at 90. Now the downside, the key levels are the previous levels that we got to back in January, down at towards 88. And if we were to go back in time and look on, say, a monthly, you can see that that 88 level is a previous resistance point, and below that there's a lot of room. So if the US dollar is to continue to fall here, there is a lot of scope for it to do that, and so there's a lot of scope for some of these pairs to rally. Now the best example of the most pure way of expressing those rallies is with the majors. So you get the euro higher, the pound higher, dollar yen lower. Something like the Aussie dollar is a little bit more mixed though, mixed like the and also dollar CAD. Now this is because the tariffs and the trade tariffs from Trump are still in play and could be announced as early as tonight, and this would most likely have negative effect on the commodity currencies out there, and those currencies sensitive to risk, of which Australian dollar and Canadian dollar and New Zealand dollar are the main ones. And that's where if you want to express US dollar weakness, you don't want to play it with the commodity currencies at all, because they're linked to global growth via the commodity, and just generally they have high interest rates and look to be supported when risk is on, and risk could definitely come off if the market is surprised by the aggressiveness of either Trump's tariffs announced tonight or China's reaction tomorrow. And that's really what we're going to be having to wait and see. 50 billion new tariffs, of $50 billion worth of new tariffs on Chinese imports is what's expected to be announced, mainly in the area where they believe intellectual property has been stolen. Now, China is also talked to have had some sort of retaliation measures already planned, so we'll see what that is in play. But most importantly, you want to see the market's reaction to the first day of this, and if the market can sort of shrug it off, then we can't be looking too negatively on the Aussie. But that doesn't stop the US dollar being sold off, which now has that bearish sort of sentiment from the Fed. So it definitely doesn't stop the euro and pound rallying if you do have no stock market correction or selling on today, or no risk off feel. But what it may do is just more impact whether the Aussie dollar falls or not in coming days, because it's been in a downtrend and struggling to capitalize on some of that US dollar weakness last night, although we did have a nice little bounce, more towards the sell zone than anything else for the downtrend. Alright guys, if you do want to have a chat more in depth about particular crosses, there's a lot in play. Please come through to the dealing room on the contact details below. If you don't have a dealer, you can join easyMarkets and get one to assist you with your trading via the link below as well.